What's up, YouTube? Today I'm going to show you how to execute time frame alignment. Today I'm working with the H4 chart. I usually do this with the daily, weekly, and the H4. So since I have the example right in front of me, we're going to go through the H4 chart. So here we have the dollar. I always use the dollar in correlation if we're trading like the indexes for futures, or we're using it for like Forex pairs. I kind of toned down trading Forex pairs because they're kind of messy, and I really just want to shift my focus to futures. So here we are on the dollar, and here's our fair value gap. I have it pre-marked up right now, so we have our fair value gap. So for time frame alignment purposes, we want to go H4 to M15. So let's drop down to the M15 chart. So here we are on the M15. I'm not sure if you guys are familiar with the market maker model. We have our buy side of the curve, and we have our sell side of the curve here, and we have our relatively equal lows down here. So notice we tap into an N15 fair value gap. Now, the next time frame alignment is our execution time frame. We can also execute here on this time frame, but our execution would have been down here in this fair value gap here, and I really don't want to like take that risk because our entry would have been here, and our stop would have been either here or here, which is fine, but I like to close my trades out of 11. I don't think I would have gotten too much. Well, yeah, I would have gotten too much, but with stuff like this, guys, in my experience, if I enter a trade and it like enter a middle of a trade, we usually spike back up for a little bit more like action, a little bit more of a liquidity grab. So I kind of just like taking my trades either up here or a little bit closer to like the spooling point. So, anyways, we have our N15 fair value gap here. Now let's drop down to the 1 minute to see if we can get an entry. So here we are on the 1 minute chart. So to recap, we went from H4 to M15 to 1 minute. My purple lines, or the purple box, is the fair value gap that we are in. So now notice, here we are. Now, and so now we're looking for a liquidity grab, which we end up getting here on the chart. Now, once we grab liquidity, we need a change in state and delivery, which we get here. So now we need a return back into fair value. So we have a fair value gap here, and this is where we enter the trade. And the same concept applies to the daily chart, the weekly chart, and the H4 chart, if you understand time frame alignment. So this whole move would have been ours. So we can take a short entry here. We can have a tight stop. Have a tight stop here with our entry right here. And what you want to do is target relatively equal lows. So our relatively equal lows are right here. So just look at the RR on that trade, guys. Look at the drawdown. And yes, you could have held this trade longer, because this trade, we would have been in this trade at 817, 820, 830-ish. And I like to close my trades at 11. So you could have held for all of this here. So this is a good move. So just a reminder, if we're bearish on the dollar, we will be bullish on GU and EU. So that's just a little something, guys. There's no need for a long-winded like intro on how to use the market maker model. Just make sure you're aligning your time frames, and you can actually see like the sell side of the curve and buy side of the curve if we're on the right side of the market. So just here, we're in this, we grab this liquidity, we're inside this fair value gap here, we have this relatively equal lows here, and notice how we didn't waste time purging this liquidity here, and we just keep falling. So yeah, guys, take this model, run with it, and good luck.